Alright, so if you saw my video on my trade recap for last week, you saw that I lost about 1,300 for the week, and it brought down my profits since July. I started keeping track of my trades on an Excel spreadsheet since July, and since July, it brought me down to 1,800 profit. I was up almost 3,400, so it kind of hurts. But I decided to review my trades, of course, see what went wrong, what I could have done better. I decided to see what would have happened if all my trades since July, if I did nothing to manage them. If once I place them, I let them expire no matter what. So if I do a put spread and it gets tested, I don't do anything. I don't sell a call spread. I just let it be. I accept the max loss and I just hold on till expiration, see what happens. And what if I did 2 contracts instead of 1 contract on everything? So normally I recently started doing 2 contracts for my credit spreads, but I could have easily done it before. I mean, I had the capital for it, but I just wanted to make sure, I wanted to get some consistent profits in, some consistent gains, just to make sure the strategy works before I started increasing the contracts. But let's just say I did 2 contracts since July. I was doing it on the SPY, but on individual stocks, I was only doing 1 contract. On earnings, I was doing 1 contract. But what if I was doing 2 contracts since July and I did not manage my tested put spreads and I let everything go to expiry? I don't close anything for profit, for 50% profit. I just let everything ride to expiration, see what happens. So I actually did this exercise and the observation is very interesting. So I wanted to show it to you. If you don't want to go through the whole process, you can just skip the video to the end. But I'm going to show you so that you really see the truth, that I'm going to go through every stock and see what it was trading at expiry to see if the spread was indeed profitable or not. So the first thing I did is I'm going to save this file a different name, because when I did it initially, I accidentally saved over my good spreadsheet, so I had to redo the whole trades. So now I'm going to do that mistake again. So now it's under a different name. Perfect. So what I'm going to do is I'm going to look at the SPY, for example. Let's start with the SPY. Here, let's filter on the SPY. It'll be easier that way. So I'm going to filter on the SPY, and I'm going to see all these trades that I made on the SPY. What would have happened? See, you can see that I've closed them here for I paid to close these trades. So what if I just let them go to expiration? Would they have been worth 0, or would I have lost on them? So let's just see. So let's look up the SPY here quickly. SPY, chart of the SPY. We're probably going to need about 3 months. So let's bring out the big chart and let's do 3 months. Perfect. And the dates are shown. Okay, perfect. So if we go back to my spreadsheet, so the first one here. So expiry July 17. I need the SPY to be above 306. July 17, let's go see what the SPY was trading at. July 17, the SPY closed at 321. You could see it above here. You can see it in this section over here. So July 17, the SPY closed at 321. So this would have been closed for 0. So this would have been expired worthless. Now let's look at July 20th. I need the SPY to be above 313. So July 20th. So July 20th, it closed at 324. So yes, another expired worthless trade. Let's look at July 22nd. I need it above 313. July 22nd, SPY is at 326. So another expired worthless. Let's look at July 24th. I need it above 313. So July 24th, above 313. July 24th. It is at 320. The low of the day was 319. Okay, so it was 7 points away. So that's another one that expired worthless. Now let's look at July 27. I need it above 314. July 27, above 314. July 27. It's at 323. It closed at 323. So that's another one that expired worthless. Now let's look at SPY. July 29th. July 29th, 318. July 29th, 318. SPY is at 325. I already forgot what did I need. I needed 318. So yeah, expired worthless. July 31st, 312. July 31st, 312. July 31st, 312. It's at 326. So another one that expired worthless. August 5th, 315. August 5th, 315. August 5th, 315. We've got 332. So yeah, another one that expires worthless. All right, August 7th, 318. August 7th, 318. August 7, we have 334. So another one that expires worthless. August 21st, we have 330. August 21st, we have 330. August 21st, 330. We've got 339. Okay, not bad. Another one that expires worthless. August 24th, we have 332. August 24th, we have 332. August 24th, we have 342. Okay, so that's another one that expires worthless. All right, August 26th, 334. That one seems close. All right, August 26th, we've got 334. August 26th, 334. August 26th, we've got 347. So another one that expires worthless. All right, August 28th, we've got 332. August 28th, 332. Yeah, 350. So that's another one that expires worthless. August 31st, we have 337. August 31st, we have 337. We've got 349. So another one that expires worthless. This is fun. All right, September 2nd, 339. September 2nd, 339. September 2nd, we've got 357. Beautiful. Ridiculous prices, but beautiful. All right, September 4th, 342. September 4th, 342. Wow, look at this. September 4th, short strike is 342. It closes at 342.57, but the low of the day was 334. So if I just accept to go to expiry no matter what, this trade would have expired worthless by 57 cents. Definitely on day of expiry, it would have been stressful because I saw that it opened at 346. It reached a high of 347, went all the way down to 334, came back up to and closed at 342.57. So if I had done nothing, it would have been a winner, expired worthless. But definitely living the moment, I probably would have taken action no matter what. But even if I did take action on the day of expiry, seeing it at 346, I would have been able to close it for pennies. Obviously, if I kept holding on to it and then I see it at 334, I would have panicked. But that's why I'm saying, what if I go back and just do absolutely nothing and just let all the trades go to expiry? This one would have also expired worthless, but it would have been a teaser. All right, so September 8th, I've got 344. That doesn't look good. September 8th, 344. It closed at 333. So this one's a max loser, okay? So the high of the day was 342. But like I said, what if I do nothing and just let it expire? Just let it go to expiry. It closed at 333. So sadly, I could have saved it, but I just want to, the purpose of this exercise is to see what would happen if I just let everything go to expiry. So this one would have been a max loser. So I would have had to pay $5 to close it, okay? Because it's even below my long strike of 339. So this one's a max loser. I'm going to pay $5 to close it. All right, September 9th, I got 348. September 9th, 348. September 9th, 348. Closes at 339. There we go. That's another loser. Okay. Another max loser, September 9th, so $5. And this was actually almost a max loser for me in real life. And now I've got September 11, I've got 335. September 11, 335. September 11, 335. Oh, it closed at 334. So that the high of the day was 337. So in reality, I would have closed it for a profit. But if I just let it expire if I just let it ride to expiry, I would have closed this for about $1. I would have paid $1 to close it because it expired at 334. So it would have been a small loser. This one here, September 9th. Why do I have? Oh, this is a call spread. So this was a call spread that I used to mitigate this one here. So in this exercise, I'm saying that I'm not going to touch anything. I'm not going to mitigate any put spread. I'm going to let everything ride to expiry. So in reality, this should not. So in this exercise, this one should not exist, okay? All right, so this is just the SPY. Notice how my cash dropped, my net profit dropped to 1628. So the SPY alone, just by going to expiry and not managing my SPY trades was not a good thing. It was good that I actually managed it at 50% because I did, by managing at 50%, I did miss out on a lot of profits, but by managing at 50%, I saved this big loser here of 897. Oh, and another thing, I said 2 contracts on everything. So if I put 2 contracts here, you see now I'm up to 1700. So 2 contracts on everything just to be consistent. So every trade has the same amount of risk. So the only advantage of managing early is I would have saved this loser here and I would have reduced a bit of loss here because I would have sold a call spread here and collected $50 or $100. That was the only advantage of managing early in the case of the SPY trades that I've been doing. Now let's look at a different position. Let's look at Apple. August 21st, Apple 355. So let's look up Apple, AAPL. So August 21st. Now we have to multiply by 4 because of the split. So Apple closed at 124 August 21st. So multiply that by 4 is, I believe, higher than my put spread. So 124 times 4 is 496. What was my put spread at? It was at 355. So this one would have been max profit. Now September 11, Apple 405. So that's about 100, right? $101 about. So Apple September 11 closed at 112. So that one was pretty close. Actually no, it was 10. It's 10 points away. So that one was good. So that one's safe. So that one would have expired worthless. Now August 28th, this was a naked call on Apple. Apple, yeah, was definitely below 660, so this would have expired worthless. And now I've got September 4th, Apple 475. So September 4th, where's September 4th? Apple September 4th, 120. So 120 times 4. 120 times 4 is 480. Why am I using a calculator? All right, so 480, and I've got a short strike of 475. So this means it would have expired worthless. Yes, because 475 is less than 480. So this one would have been max profit as well. And look at my net profit up to 1945. Now let's look at Adobe. I only had one trade on Adobe. It was an earnings trade. This one's quite interesting because this one was a big time tester at on expiry. So September 18, Adobe 462.5. So Adobe September 18, you can see that it's kind of crazy. September 18, it closed at 467. My short strike is 462, so it expired worthless. But look at the low of the day. The low of the day was 452.52. So it actually was a big time loser in the same day, but it went back up and closed at 467.55. So, but it opened at 477 and the high was 478. So in reality, if on expiry date it's trading at 478, I could have closed it for 5 cents or something. But let's say I really did nothing and just let it go to expiry. On that day, I would have totally regretted it because it became a max loser. It went from 95% max profit to 100% max loss, and then back up to expiring worthless. So that was ridiculous. So I'm gonna have to put 0, although I'm sure in reality I would not have been able to just let it go like that. But yeah, so this one would have been a max profit, and my net profit is now up to 2045. Now let's go to Amazon. I've got 2 trades on Amazon. So this one was done last week, so I know it would have expired worthless because Amazon closed on Friday 30.90, and I had a short strike at 29.20. I was actually afraid of 29.20. Can you believe that? I opened it for $2 and I got scared. I closed it right away the next day for $2 as well for break even. But if I just went to expiry, this was a max profit. So this was a $193 net profit that I just wasted by getting scared. And this one here was August 21st, Amazon 2805. Let's go check. Amazon August 21st. We want it above 2805. So Amazon August 21st is over here, and it closed at 32.84. So yeah, another max profit over here. So my cash, not my cash, but my net profit is up to 22.98 now. Now let's go to Activision. I think this was an earnings trade. If we go to August 21st, 75 strike. So August 21st on Activision, 75 strike. So August 21st, we've got, it closed at 83. So that makes it expire worthless. So that's a full profit. Now I'm up to 23.38. Oh, I forgot to change the contracts. It should be 2 contracts. So if we go back to Apple, Adobe, and Amazon, make sure that it's 2 contracts on everything. So Apple, 2 contracts. Amazon, I think, was 5 point wide. So 2 contracts, 2 contracts, 2 contracts. Another Apple, 2 contracts. Adobe was 3, so that was exceptional. I did 3 that day. And Amazon was a 10 point wide, so it's that is like 2 contracts because I did 10 point wide 1 contract instead of doing 5 point wide 2 contracts. Okay, and you can see now my net profit is 26.92 just from making these small changes over here. And let's go to Baba now. Baba, let's change it to 2 contracts, and Let's look at BABA September 4th at September 4th. Is it above 272? So September 4th, BABA, is it above 272? Let's wait till it loads. September 4th, BABA is at 281, but it did have a low of 267. So that one also came close as well, but then came back up and closed at 281. So that one was a close call, but it does expire worthless. So closed at 0. Okay, my net profit now is at 2806. CHGG was an earnings trade, closed pretty quickly for 30 cents. Let's see August 21st. If I held it till August 21st, does it stay above 70? So let's see. CHGG, don't even ask me what it is. CHGG, August 21st. It closed at 77 on August 21st. What did I need? I needed 70. Perfect. So that one would have been full profit. All right. Change the contracts again. 2 contracts. So now I'm up to 29.21 in cash in profit since July. If I had done 2 contracts on everything, and if I just let everything expire worthless. All right. So this is like 2 contracts. So this is fine. Chewy, September 11, 53 strike. This one I had already checked. I remember pretty well. Chewy closed at 53.5, so it was very close, but it does end up expiring worthless. Would have been a close call, and yeah, so that's $140 profit. So I'm up to $29.91 net profit since July if I had done 2 contracts and let everything expire worthless. Costco, super annoying. It dropped to 338 on Friday and September 25th, but closed I think at around 342, 345. So that one would have been all profit. I ended up closing it for break even because I got scared. But that would have been a full profit one. 31.95 profit right now. What is the next one here? So I've got Coop next. So one earnings trade. So Coop 245 September 11. Let's look it up. Coop 245 September 11. Am I on Coupa now? Yeah. All right. So September 11. It closes at 243.24. But it had a high of 258 and it opened at 257. So in reality, I would have closed it for 5 cents or 10 cents. But let's say for the purpose of this exercise, I just go to expiry. I would have had to pay about $2 to close this. So this one would not have been a winner. This one would have been a loser, a small loser for the purpose of this exercise. But I guarantee you in reality, if I see this trading for 5 cents, if I see a credit spread trading for 5 cents, I'm going to close it. All right, so let's look at the other one, CRM. I got 257.5. First, let's make 2 contracts. 257.5 for September 4th. So CRM September 4th closed at 254.7, but it had a high of the day of 265. So another one where if I did manage on the last day, I would have closed for profit. But if I held it till expiry, it closed at 254.7 and I needed it to close at 257.5. So this is about $3 to close. So this one ended up being a winner, but because if I let it go to expiry, it ends up being a loser. So that's the advantage of managing your trades early sometimes, is that you could save a trade from becoming a loser, but there is a trade-off, is that you're probably throwing away a lot of profits that would compensate for those max losers. So that's what I'm trying to figure out here, if I had just let everything go to expiry. All right, so next we've got CrowdStrike. We've got 2 contracts and I want to go to September 4th. Is it above 115? So CRWD, is it above 115 September 4th? September 4th, it is at 125, but it did have a low of 115, so it would have really hurt. It would have been very close, but it ended up closing at 125. So this one was all profit. And anyways, I closed it for 15 cents, which is pretty good. But I think this was like, I opened it one day and I closed it the next day. So it's really hard to ignore such a big profit quickly and just let it ride till expiry and actually come super close on expiry to being a loser. So I think you have to close these trades for that big of a profit that early. Anyway, so this one was a winner. If I had just gone to expiry, would have been a bigger profit, and my net profit is now at 24.87. So now what's next? I've got CVNA Carvana. This one, yeah, obviously expired worthless. I had a naked call at 300 for last week and definitely didn't even reach 240. I closed it for 25 cents the same day because I'm always afraid of naked calls because the risk is unlimited. But yeah, this one would have expired worthless, so more profit. I had already done 2 contracts. What's next on the list? I've got DocuSign. Oh, beautiful DocuSign. All right, so DocuSign, I had already checked. They all expired worthless, but I guess we can check again. September 4th. They're both September 4th, actually. All right, Docu September 4th closed at 216 and it had a low of 205, okay? So I've got a strike of 190 and 200. So both of them would have expired worthless. And this one was a naked call of 400, was obviously a winner. And I did end up actually letting it expire worthless. I wish I did more contracts. Let's just say I did 2 contracts on that one. And then I did obviously 2 contracts. I said I would do 2 contracts on all my credit spreads. So now I'm up to 29.22. Did I put 2 contracts on the previous one? Yeah, okay. EA was an earnings trade that would have also expired worthless. And let's say I did 2 contracts, so I would be up 3,000 right now. Let's go to the next one, Etsy. I've got a naked call on Etsy that I did let expire worthless, and I've got a put spread. I should have done 2 contracts. So let's look at Etsy August 21st. Is it above 105? Etsy August 21st. Is it above 105? Etsy August 21st is over here. It is at 130, so way above 105. So this one would have been all profit. So 0. So now I'm up to 31.77 since July. Next on the list is Facebook. Look at that. My put spread on Netflix got filled. So I've got Facebook 215 August 21st. So let's go to Facebook. Pretty sure that was that expired worthless. So August 21st, Facebook 267. Not even close. That's sad. All right. So 0. And let's say I did 2 contracts. Okay. I'm up to 32.97. Now let's go to FedEx. This one was definitely a winner. I guarantee it. So 0 and 2 contracts. And this one was what? A 217 on September 8th. Okay, so this was the earnings trade. And this one was a preview. Actually, let's double check this one. So FedEx closed September 4th at 226, but it had a low of 217. So it came close to my short strike of 215. But regardless, it closed at... It did expire worthless, so now I'm up to 34.43. Now let's look at Fastly. I think Fastly was a loser. Okay, so first of all, let's remove the call spread because this was a mitigating call spread. And I said that I would not do any mitigation. I wouldn't do any management. So I'm removing the call spreads. I'm adding 2 contracts to the put spreads. And okay, so Fastly, August 21st. Would it have closed at 85? Fastly, August 21st. So Fastly, August 21st, closed at 85.05. That is hilarious. And that's why sometimes it's kind of cool to let it expire worthless. That one would have been a winner. I'm up to 3,700 net profit since July, almost. Now I've got Google. Google was a winner for sure. 2 contracts. I'm up to 38.57. CarMax, yeah, CarMax I can tell you was a loser. No questions asked. So no call spread to mitigate, and I did 2 contracts, and this one would have been a max loser. So now I'm back down to 37. That's crazy. All right, so now what's the next one? Lululemon. Yeah, okay, Lululemon was interesting. Lululemon I think was the only one that it's a good thing I managed. But if I did not manage Lululemon, I can tell you that this one was a winner. 2 contracts, and you could verify it. So September 4th, 360. Lululemon September 4th, 360. Lululemon September 4th, 360. Yeah, 361. So very close, but a winner. And then the other ones is a different story. So where's that call spread? I'm going to remove the call spread because I wasn't supposed to mitigate. All right, so remove the call spread. Put spread, 2 contracts. Okay, so this one was a winner. This one here was 320. This one was a max loss. I remember it closed at 313. And so this one at 300 would be a winner. Okay. So there you go. Lulu would bring me down to 28.64 if I had just let everything ride to expiry. So now it's a little bit hesitating. Is it best to manage early or is it best to let things go to expire? But I want to go through all my trades and then we're going to make a conclusion. So LVGO, no call spread for mitigation. And I remember LVGO August 21st I think it closed above 120. Let's check LVGO. LVGO August 20. Was it August 21st? I forgot already. Yeah, August 21st. It closed at 140. Okay, so that would have expired worthless, which it did actually. I closed it for a penny. Should have done 2 contracts. Did I put 2 contracts for Lulu? Yeah, I think I did. All right, so LVGO. So now let's go to Netflix. Let's do 2 contracts on everything. Netflix was a call spread, but it was initially a call spread. It wasn't a mitigating call spread. And this one I remember carefully. I closed it too early because I chickened out, but this one would have expired worthless. So that was an easy profit right there. I'm up to 36.46 now. Let's go to Nike. Nike, yeah, I ended up closing it for 2 cents. So it's like it expired worthless. So if it's trading for 2 cents, I'm not going to hold it till expiry. I'll close it. But if it's still trading for 40 cents, so 50% of the profit, then that would be a scenario where I would hold till expiry. All right, so this one I ended up closing for max profit. Nvidia, naked call, okay, no problem. So put spread 500, ended up closing for 44 cents. September 4th. So let's look at Nvidia September 4th. Nvidia September 4th was at 504. Wow, it had a low of, that's ridiculous. It had a low of 468. That would have been really annoying. How did it go from 468 to 504? That's ridiculous. All right, so it closed at 504. So that would have made my trade profitable, but I would have been very nervous, because it was 20 points or 30 points lower. But anyways, it ended up closing profitable. Let's do 2 spreads on everything. Naked call, yeah, that's profit. I could have closed it. That would have expired worthless for sure. September 25th, we've got, why do I have 2 put spreads on September 25th? So we've got 465 and 470. Oh yeah, this is the one I chickened out on, but would have been profitable for sure. And this one would have been profitable as well. So yeah, so 2 contracts and they would have all expired worthless, and now I'm up to 41.86. So you can already see what the conclusion is, right? So Peloton expired worthless as well. I closed for 2 cents, so same thing. I had already done 2 contracts. RH, I did end up closing. I let it expire worthless because it was 100 points away from my strike, so no questions asked. Rocket is a naked put. Roku had a naked call that I let expire worthless, and the 140 strike I believe would have also expired worthless if I had done 2 contracts. So let's look at the Roku 140 strike. So Roku 140 strike, what was the expiry? The expiry is August 21st, 147. So yeah, that would have expired worthless, and I'm up to 4,300 net profit. Silver came very close, but it would have expired worthless. It was a naked put. And Uber as well, if it's on the list. I've got Spotify. So let's look up Spotify, since I had a lot of trades on Spotify, but I think overall it was good, but let's look it up. So Spotify, so this is an iron butterfly because I was mitigating a put spread. So let's remove this. I think I had collected 80 cents on a put spread, and let's just say it was a put spread. I did 2 contracts, and let's say 2 contracts here too. This put spread ended up Spotify July 17. Let's see what it closed at. I think this one was a small loser. So July 17, Spotify closed at 263. I had a chance to close it for a profit because it had a high of 269. But if I just go to expiry for the purpose of this exercise, 263, I would have ended up closing it for $2. Okay, so opened for 80, closed for 2. So that's a loser. Naked call, it expired worthless. This one would have expired worthless as well. This put spread August 21st, Spotify, August 21st, 270. I had a put spread at 235. So that one would have expired worthless, and naked call expired worthless. So now I'm up to 4,600 net profit. Now let's, the SPY I already did. Square, I had already checked. It's expired worthless. Let's look at the next one. I've got Stamp. Here, let's just highlight. Oh, there's a lot left to go. So Stamp and Tesla. So I've got a lot of Tesla, scary. All right, Stamp, I know it expired worthless, 220 strike. And let's say I did 2 contracts. I think I forgot to put 2 contracts on Square. So Square, let's say 2 contracts. And now I'll go back to Tesla. All right, so where's the call spread on Tesla? So this was mitigating call spread, I'll remove it. And this was another mitigating call spread, I'll remove it. And I'm gonna put 2 contracts on everything, okay? So this one 430, 425. If I had gone to expiry, I did end up closing it for 332. But I think it would have been a max loss if I had gone to expiry. But I was closing it at expiry actually. I was closing it in the last 30 minutes. So I'm gonna leave it at 332. That's what it was trading for in the last 30 minutes. I think I made a video me trying to close the split spread in the last 15 minutes of the day. So that would be the time where I would close my spreads at expiry, and it would have been I would have closed it for 332. But if I let it go to expiry and don't touch it, then it would be a $5 loss for sure. So let's just put $5. This put spread 380 was a winner on September 4th. This call spread we're not touching. September 25th, this 370 would have been a winner. We saw that. 340 on September 25th was a winner. And that's it. All right, 2 contracts. So now I'm up to 5,221. Even with all these spreads that I let expire to max loss. So TTWO, I think was also expired. It also expired worthless. So TTWO, August 21st. TTWO, August 21st. It expired at 170. It closed at 173. Yeah. So like I said, expired worthless. 2 contracts. All right. Now let's go to the next one here. TWLO. This call spread, I believe, was a mitigating call spread. So let's remove it. And I've got 2 contracts. And I think it did expire worthless. So TWLO, August 21st. Let's look it up. TWLO, August 21st. Expired. Closed at 251. So yeah, expires worthless. So put 0 here. So let me just highlight everything because I'm pretty sure I lost most people by now. And I'll just put from memory. I know that this one would have expired worthless. 2 contracts. Uber I would have had to pay about 2 cents to close it. So let's just say 5 cents to close it. Alta expired worthless, worthless, worthless in reality. Let's just put 2 contracts. And Zoom 2 contracts, and this one did end up expiring worthless. So I did let some of them expire worthless. This one I paid 5 cents to close, would have expired worthless as well. And this Zoom would have expired worthless. This is the one where I closed for a loss last week because I got scared. And look at this. Look where my cash is. Or not my cash, but my net profit. My net profit in July would have been, since July, would have been 62.81 if I had done the exact same trades. I had done 2 contracts instead of 1 contract on everything. And I would have just let everything go to expiry. I would have been up 6,200 profit US, net profit. Instead, in reality, I am only up 1,800 US net profit. And that's because I closed my profitable trades at 50% and I manage my tested put spreads by selling a call spread against them. To summarize, in conclusion, that basically means that my over management of my trade is what's causing me to lose. Now, if I select everything now and we look at it week by week, you can see that the first week would have made net profit of 601, second week 551, third week 1254, fourth week 1580, the next week 726 profit, and then 910 profit, so much bigger profits, 1308 profit. Now the week after I would have lost 147 net profit. So there are weeks where I'm going to be losing, and in fact look at this week. This would have been a very bad week. 1605 lost for that week. This was the week that had the Lululemon. It's probably because of yeah, for sure it's because of Lululemon. Look at this beauty. All right, $1,000 stupid Lululemon. All right, so 618 the next week. So Lululemon was an earnings trade anyways. So yeah, so sometimes it does lose, but overall, as you could see, since July, I showed you exactly what I changed. I did 2 contracts instead of 1. I was being consistent across my credit spreads, and I don't manage my tested put spreads, and I let everything go to expiry. 480. So the last week where I lost 1,300, I would have made 489 profit if I just let everything go to expiry and if I did 2 contracts. So I think that's pretty ridiculous. I think that's a very good observation. It's scary to let things go to expiry, but as you can see, numbers don't lie. I mean, these are the trades that I actually made, but if I just changed one thing in the past 3 months, I would have been up 62.81. So that's ridiculous. All right, so let me know what you think of this conclusion, this observation. Leave in the comment section below. As always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.